Nykaa starts FY27 with strong momentum. Fashion growth hits multi-quarter high. Nykaa has started FY27 with one of its strongest quarterly business updates in recent years. The company reported healthy growth across both its beauty and fashion businesses, supported by strong customer acquisition and improving operating performance. According to the provisional business update, consolidated gross merchandise value and net sales value are expected to grow in the early 30s. Consolidated net revenue growth is also expected to reach nearly 30%. This marks a meaningful improvement compared to recent quarters. It suggests that demand across Nykaa's digital platforms remains healthy despite a competitive retail environment. The beauty business continued to perform well during the quarter. Net sales value and net revenue are both expected to grow in the late 20s. Management stated that revenue growth may remain slightly below net sales value growth. This is mainly because House of Nykaa contributes a larger share of sales and does not generate marketing income like third-party brands. Despite this, overall marketing income continued to grow strongly. This reflects healthy activity from partner brands and a vibrant beauty marketplace. Nykaa's omnichannel strategy also continued to deliver encouraging results. The beauty retail business maintained the strong momentum seen during the previous quarter. Physical stores remained an important growth driver. Mid-teens like-for-like sales growth, combined with store expansion, helped strengthen retail performance. As of June 30, 2026, Nykaa operated a total of 324 beauty stores. The expanding retail network continues to strengthen the company's omnichannel presence across India. House of Nykaa also maintained impressive momentum during the quarter. Brands such as K-Beauty, Nykaa Cosmetics and .org continued to perform strongly. The fashion business emerged as the biggest highlight of the update. After several slower quarters, the segment delivered a sharp acceleration in growth. Fashion net sales value is expected to grow in the mid-50s. This represents one of the strongest growth rates reported by the business in several quarters. Net revenue growth in the fashion division is also expected to reach nearly 50%. This marks a multi-quarter high for the segment. Management attributed this improvement to better conversion from gross merchandise value to net sales value. Lower operational leakages also supported overall performance. The core fashion platform benefited from continuous investments made over the past few quarters. A wider brand assortment and higher marketing spending helped attract new customers. Importantly, growth was broad-based rather than concentrated in one category. Women's wear, men's fashion, kids' products and home categories all delivered healthy performance. Another positive development was Nykaa's partnership with Nykaa. Management indicated that the collaboration has produced encouraging early results. Adding premium global brand strengthens Nykaa Fashion's overall positioning. It also improves the platform's ability to attract higher value customers. For investors, the strong fashion recovery is one of the most encouraging takeaways. The segment has often been viewed as Nykaa's biggest long-term growth opportunity. A stronger fashion business also creates better revenue diversification. This reduces the company's dependence on the beauty segment alone. Customer acquisition remained healthy across both businesses. Expanding the active customer base is important because it creates opportunities for repeat purchasers and cross-selling. Nykaa has invested heavily in building its brand ecosystem over the years. Its strategy combines owned brands, third-party products and physical retail stores into a single consumer platform. The company's omnichannel model continues to differentiate it from many online-only competitors. Customers increasingly value the flexibility of shopping both online and offline. However, investors should continue monitoring profitability alongside revenue growth. Strong sales growth is encouraging, but margin expansion remains equally important. Competition within beauty and fashion e-commerce continues to intensify. New entrants and aggressive discounting could influence future growth rates. Investors should also watch customer acquisition costs in the coming quarters. Sustainable growth depends on balancing marketing investments with healthy profitability. The continued expansion of House of Nykaa brands is another important factor. Owned brands generally offer better margins and stronger customer loyalty over time. Growth in physical stores will also remain a key indicator. A successful omnichannel strategy can strengthen customer engagement while supporting long-term revenue growth. The early success of the Nike partnership may encourage Nykaa to add more premium international brands. This could further strengthen its position in India's premium fashion market. Looking ahead, management appears confident about the overall business momentum. Continued execution across beauty and fashion will be important for sustaining growth through FY27. Overall, Nykaa has delivered an encouraging start to the new financial year. Both major business segments contributed meaningfully to growth. The strong recovery in fashion is particularly noteworthy. Investors should now focus on profitability, customer acquisition efficiency and execution as the company builds on this positive momentum. The company's performance in Q1 FY27 suggests that its investments in brands, technology and retail expansion are beginning to deliver results. If this momentum continues, Nykaa could strengthen its position as one of India's leading beauty and fashion platforms while creating long-term value for investors.